Hey guys, I'm Kayla, the travel nurse, and today we're going to talk about tax homes. So, what is a tax home? It's a very common question. There's a lot of information about tax homes, and it can be a little confusing. So, the simplest answer, as it relates to travel nursing, is your tax home is your permanent residence in the state you hold a driver's license in. It's also the location you're traveling from when you intend to claim business travel expenses on your tax return. I'm going to post here in the video a standard tax home declaration form that you'll get mostly from your travel companies. Some of them look a little bit differently, but all basically the same. Maintaining your tax home is what allows you to have all these great stipends and reimbursements from your agency. Traditionally, the IRS checks for 3 things when declaring a tax home. Number 1, are you living and working in that area at least some of the time? Number 2, do you have duplicated expenses when you work somewhere far away from your permanent residence? And number 3, are you meaningfully connected to your permanent residence and the community around it? So in order to have a tax home, at least 2 of these 3 things must be true. For most travel nurses, it's the second and the third factors. However, as a traveler, 1 factor may qualify you to have a tax home. So according to the IRS, traveling expenses are only deductible if they are incurred as business expenses while someone is away from home. That being said, doing business outside of your tax home isn't the only requirement to claim those reimbursements. On top of needing to be away from your tax home, the IRS also requires that your job be temporary. And having a temporary job means that you've got reason to believe that you won't be working in that specific location longer than a year. So what are duplicated expenses?
Here's an example of a duplicated living expense. So let's say you pay $1,000 a month for rent or mortgage back home, and at your new contract location, you're paying $500 a month for rent. Doesn't matter how much these numbers equate to, it just matters that you're paying for living expenses at 2 different locations. Now, even though you're going to be away from your home for 13 weeks, or however long your contract is, you're still expected to pay that $1,000 a month to maintain your home. So if you take the $1,000 a month you're paying in rent back home, the $500 a month for your rent on contract, those together would equate to a duplicated living expense.
So travel nurses usually have a permanent residence that they pay rent to or pay a mortgage on. And at the same time, when you're on a contract, you're usually renting an Airbnb or subletting an apartment, or you may even live in an RV. And all those costs associated with that second residence that's temporary wherever you're contracted to, that's an expected expense, but it also provides that duplication of housing expenses. So because you have a duplicated expense with housing, you qualify for all the stipends and reimbursements that are offered by your company. And these are the same stipends that we discussed in the last video. And any reimbursements offered by the company would be things like your travel to the contract and licensure fees. Those are very common reimbursements. Now, what happens if you don't own or rent your own place yourself? You have another option. You can always rent a room from a friend or a family member, but you have to pay fair market value for that room or that space you're renting. And if you have shared living expenses such as electric bill, water bill, internet, etc., you have to be able to show proof of those as well. Some people will put the utilities in their name just to show proof that they do reside at that residence and that they do pay those bills. So you have that option as well. Otherwise, if you were paying rent and you were paying half of the utilities, you could always have your landlord, your friend, or your parent, whoever you're staying with, write you a receipt every month as a paper trail to show proof that you are paying those bills. So in the IRS publication 463, they clearly defined tax homes and who qualifies for them. So essentially, the IRS wants you to declare your tax home as the primary state or area that you're holding business or holding a job or the place you work. But there is a little excerpt in there, which I'm going to put on the screen here, about what you do if you have no main place of business or work. So if you don't have a main place of business or work, you may still have a tax home. Your tax home may be the home where you regularly live. So this is nice because this is applicable to the majority of travel nurses. A lot of travel nurses do not carry per diems back home. There's just no need. You're always on the road, you're always traveling. There are nurses who do that, who do maintain per diems back home for whatever reason. And in that case, you're fine, you're still covered. How long can you stay at an assignment in one location? That's a very common question. I reached out to a bunch of my recruiters. I scoured the internet, I checked the IRS, and I finally found an answer. So the consensus is that you cannot stay in one location greater than 12 consecutive months in a 24-month period. What happens if you really like a place and you want to stay as long as humanly possible? What happens if you want to go home or go to another contract and then come right back? There is a way to restart the clock. According to NATHO, they have decided that one contract length or 13 weeks away from the contract location is a sufficient amount of time to restart that clock. Because the IRS rules for restarting the clock are very vague. The IRS specifically says 3 weeks is not long enough, 30 days is questionable unless you're working a per diem. 7 months is an adequate amount of time. So NATHO decided to just split the difference and said 13 weeks or the equivalent of one contract length is plenty, and then you can come back. Let's say you don't have a permanent residence or a tax home. What do? Well, if you don't have a tax home, you don't rent, you don't pay a mortgage, you have no one to live with, no utilities, no bills, nothing to prove that you are a resident of a specific area, you are what is known as an itinerant worker. An itinerant worker is someone who travels around temporarily but does not qualify to receive tax-free stipends. You really are a true nomad. And that being said, your tax home would be wherever you were working, which would vary every single contract. So in order to receive all those stipends and reimbursements that, again, we talked about in the last video and that we talked about earlier here, you have to have a tax home. What can you declare on your taxes as a traveler? I'm gonna lead this by saying you really need to invest an accountant who specializes in travel taxes. I'm actually going to make another video about this, but I will link some resources in the description box down below for you to look it up, since it's almost tax time anyway, and that might be very useful and beneficial to you now. But as of 2018, travelers can no longer deduct travel-related expenses. However, you should still keep detailed receipts for auditing reasons to prove some of the deductions that you do claim, and or if the laws change again. As a traveler, prior to the law change in 2018, you used to be allowed to claim itemized expenses, just food, gas, meals, licensure fees. Now the only way to recoup that money spent is through your stipends and through the reimbursements that are provided by your company. And each company will reimburse you for different things. All you have to do is ask. You also can't deduct differences in housing stipends and actual housing costs. So if you spend $2,500 a month and the agency only gives you $2,000 a month and you pay that $500 out of pocket, you can't deduct or claim that $500. Now, you could have done this prior to 2018, but like I said, the laws have changed, so that's no longer an option. I also mentioned auditing. Being audited sucks. I was audited my very first year of travel because my company was under-taxing me. They weren't even taxing me the minimum federal tax. I had no idea about anything. For me, I was very fortunate because it fell back on the company, but I did get audited. So I did have to prove, that I had duplicated expenses. I had to prove that I had travel expenses. I had to show receipts. I mean, I had to go through the whole thing. There was no penalization on my part, but I did have to, I guess, defend myself to an extent. But financially, the agency was the one at fault and responsible for fixing everything. The key here is documentation. Document, document, document. It's just like in our nursing practice. If you didn't document it, it didn't happen. You must be able to show a paper trail of your duplication of travel expenses and all of your business expenses that you incur along the way. Keep copies of all of your receipts, even things like airfare costs, baggage fees, mileage that you drive, tolls, hotels, rental car receipts, anything that it takes to get to and from, any bills that you incur while you're away on business as it relates to your business. Those things need to be kept. And also, you need to keep copies of all of your contracts, the actual contracts themselves. That's just a side note, but just keep copies of everything because, again, you could be audited up to 7 years down the road. And I don't know about you, but I'm not going to remember 7 years from now, like how much money I spent on gas getting from Florida to, I don't know, Nebraska, and why I claimed X amount of dollars and how I could prove that. So always keep everything. I have like a little envelope that I write where I'm going. Like for here, I wrote Michigan, and then I wrote the month and the year, and then I keep it down in my door. So when I'm traveling and I stop for gas, I get my receipt and I put it right into the envelope. I do that for toll bills. I do that for the gas receipts, for when I buy food. And then if I stay at a hotel or an Airbnb, I'll get the receipt and I'll fold it up and I'll put it in the envelope. So then everything is in my envelope, self-contained, and all I do is put it in my file folder and hold on to it until I get back home. And then once I get home, I transfer it over into my file folder box that I keep that's categorized per contract. And then when it's tax time, I just pull out that envelope, I scan everything over to my accountant, done. Easy peasy. That way nothing gets lost. Everything's organized. It seems to be a good system that works personally for me. So if you think that would work for you, go ahead and implement it. I think it would be a great idea to try on your next contract. I hope that I added some clarification and I didn't further confuse you about what a tax home is. I will see you in the next video. Good luck and happy travels.